Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 11th, 2025, and we're diving into Coca-Cola's recently released fourth quarter and full year 2024 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Coca-Cola's latest earnings report provides a comprehensive look at their performance over the past year, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Coca-Cola reported revenues of $11.5 billion for the fourth quarter, marking a 6% increase. However, the organic revenue growth was even more impressive at 14%. John, what drove this substantial growth?
Absolutely. The growth was primarily driven by a 9% increase in price mix and a 5% rise in concentrate sales. The company also benefited from 2 additional days in the quarter and favorable timing of concentrate shipments. This strong revenue performance translated into a 19% increase in operating income, showcasing Coca-Cola's ability to leverage its pricing strategy effectively.
And how did this impact their earnings per share?
The adjusted EPS for the quarter grew by 12% to 55, beating the analyst's forecast of 51 cents. This indicates that Coca-Cola not only managed to grow its top line, but also improved its profitability metrics significantly.
Operational efficiencies and future outlook. John, Coca-Cola's operating margin for the quarter was 23.5%, up from 21% last year. What factors contributed to this margin expansion?
The margin expansion was largely due to strong organic revenue growth and the impact of refranchising bottling operations. However, it was partially offset by higher input costs and currency headwinds. Looking ahead, Coca-Cola expects to deliver organic revenue growth of 5 to 6% in 2025, with adjusted EPS growth of 2 to 3%, despite anticipated currency headwinds.
That's an optimistic outlook. How does Coca-Cola plan to achieve these targets?
The company is focusing on its revenue growth management strategies, expanding its brand portfolio, and increasing its market presence through strategic investments in cold drink equipment and outlet coverage. These initiatives are expected to drive consumer recruitment and long-term balanced revenue growth.
Cash flow and capital allocation. Turning to cash flow, Coca-Cola reported $6.8 billion in cash flow from operations for the full year, a significant decrease from the previous year. What were the main factors behind this decline?
The decline was primarily due to a $6 billion deposit made to the IRS related to ongoing tax litigation. Excluding this deposit, free cash flow was $10.8 billion, up 11% from the previous year, reflecting strong business performance and working capital benefits.
And how is Coca-Cola allocating its capital?
Coca-Cola continues to prioritize shareholder returns, paying $8.4 billion in dividends and repurchasing $1.8 billion in shares. The company has a strong track record of increasing its dividend for 62 consecutive years, demonstrating its commitment to returning value to shareholders.
CEO insights and strategic initiatives. James Quincey, Coca-Cola's CEO, mentioned the company's all-weather strategy in the earnings release. Can you elaborate on what this entails?
Certainly. Quincey highlighted Coca-Cola's ability to navigate dynamic external environments by leveraging its global scale and local market expertise. A key initiative under this strategy is the expansion of returnable glass bottles, which offer both affordability and premium packaging options tailored to local market needs. This initiative not only supports revenue growth, but also aligns with sustainability goals.
How does this strategy position Coca-Cola for future growth?
By focusing on both global and local market dynamics, Coca-Cola is well-positioned to capture growth opportunities across diverse markets. The company's strategic investments in product innovation and market expansion are expected to drive long-term growth and enhance its competitive edge.
Key takeaways. In summary, Coca-Cola delivered a strong fourth quarter with impressive revenue and earnings growth, beating analyst expectations. The company's strategic initiatives and focus on operational efficiencies position it well for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Coca-Cola's performance and outlook.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more in-depth financial analyses. We'd love to hear your thoughts on Coca-Cola's performance in the comments below. Until next time.